Welcome back to Unfoolish Investing, everybody, where we dive into the latest market insights and help you make smarter financial decisions. Today, we're focusing on what Affirm's recent earnings report and why this buy now, pay later service leader has the market buzzing. If you're keeping an eye on fintech and digital payments, Affirm's growth story is one you'll want to know about. And big shout out to Larry. I know I said he was going to be here, but I think he left on the jet plane and he's flying back. Should be here for the next episode. We miss you, Larry. So let's jump into it. Affirm delivered impressive results, beating expectations on both the top and bottom lines. Loss per share was 31 cents, better than the expected 35 cents. Revenue came in at $698 million, topping forecasted $664 million. The numbers underscore Affirm's focus on smart, cost-effective growth. Notably, revenue grew a robust 41% year over year. That's insane! Even faster than the transaction volume. This tells us Affirm is not just expanding its user base, but is also managing its costs effectively, driving higher revenue per transaction. Gross merchandise volume, or GMV, is a key metric for Affirm. GMV represents the total transaction value processed through its platform, a strong indicator of its usage and reach. This quarter, Affirm's GMV grew by 35%. 35% year over year, reaching $7.6 billion. That's insane. Well above estimates. This growth signals that Affirm successfully expanding its user base and encouraging frequent use. Even more impressive, revenue outpaced GMV growth, showing that Affirm is optimizing costs while scaling up. Revenue less transaction costs, RLTC, was $285 million. $285 million, right? Versus the expected $265 to $280. Again, Affirm is just crushing all expectations on top and bottom. This is exactly what you want in your growth story, especially in the BNPL service sector. CEO Max Levchin has set an ambitious target. Anyone guess what it is? Affirm aims to reach GAAP profitability by fiscal Q4 2025. This goal represents a major milestone for the company, signaling a shift from a growth at any cost approach to a sustainable, profit-driven model. By balancing growth with profitability, Affirm is showing a commitment to long-term financial resilience rather than simply chasing new users, which you don't want to see. If you see a company stuck in that chasing new user model, that's a company that's not going to be successful long-term. That is not what we have right now in Affirm. We have sustainable long-term profitability. We have transition from a growth at any cost strategy. We have a company focused on stable and scalable growth. And we have a company focused on operational cost efficiency. Love it. Every which way you go. Looking ahead, Affirm has issued optimistic guidance for the second quarter. Revenue is expected to range between $770 million to $810 million, aligning closely with market expectations. GMV is projected between $9.35 billion and $9.75 billion, slightly above analyst estimates. Anytime you can get above analyst expectations in any way, that's a win in my book. That is a win in my book. There's one other area that I'm loving right now with Affirm, right? Can anybody guess what it is? It's their partnerships. Right now, Affirm is linked up with Apple via its Apple Pay service, Amazon, and Shopify. For any unfoolish investors out there, we are Shopify people. If you're not in it, we'll talk about it in an upcoming episode. Amazon and Shopify are essentially the majority of all online e-commerce transactions. That's like Amazon and Shopify. Shopify is all those low to middle companies, and Amazon's your big guy. I love the fact that these three juggernauts in the tech and e-commerce space have locked in with Affirm. That to me is another reason why I say, if you're not in Affirm right now, don't be afraid to start dripping into it today. Don't be afraid, because it's only going up. It could come back down, but long term, when you see the juggernauts jump in and say, buy now, pay later, Affirm, because let's look back a couple of years, right? Apple, when Affirm came onto the scene, was like, what is this buy now, pay later? And they attempted to launch their own. And you know what they ended up doing? Backing away from that strategy years later. And now they're linking up with Affirm to take care of that. That to me tells you that Affirm is the story in this sector. Now, finally, what do we all have coming up, right? October just ended. It's November. We're getting a little closer to Thanksgiving every day. Buy now, pay later. To me, buy now, pay later is the Christmas fund, right? This is the place where the holidays link up with Affirm perfectly. It's a way for families to spread out holiday expenses without upfront costs or high interest credit cards. This approach allows for true flexibility in budget management or, just cash management, making buy now, pay later an attractive option during the holidays. Because maybe you don't have that $500 that you want to pay out right now for that PlayStation or Xbox or scooter or electric bike. You have Affirm. You can manage your cash flow by signing up, linking in with them, and paying a little bit every month until it's paid off. Affirm's integration with Amazon, Apple, Shopify ensures it's upfront and center for all shoppers, allowing people to enjoy their holiday shopping without the financial stress that usually follows in January and February when people are like, how am I going to pay off my credit card bills? This is where I see Affirm continuing to grow year after year. I'm an Affirm stockholder. I love the company. I continue to buy into it. I can't say enough good things about it. I really do think that this company is, without a doubt, the place to be for all buy now, pay later. The company is committed to sustainable growth. It's leveraging strong partnerships, and it's prioritizing efficiency. And again, as we head into this high demand holiday season, Affirm's focus on larger transactions, profitability, and strategic positioning could make it a strong player in the buy now, pay later space for years to come. Thanks for tuning into Unfoolish Investing. Remember, smart investing is about understanding the long-term potential of your choices. As always, stay patient, stay informed, hit like and subscribe, email us at unfoolishinvesting@gmail.com, and most importantly, stay unfoolish. We'll see you next time.